Hi, hey guys, this is Gio Garcia. This one's a solo podcast, a virtual podcast for the people that cannot be in Vegas or they haven't been in Vegas yet. We got our first host, Nick. How do you pronounce your last name, Nick?
Yeah, it's Veri-check. I know it sounds like there's E's, but it's A's.
Yeah, I don't want to murder that one. So Nick Varichak. So thank you for being with us, man. We're gonna talk about a little bit of everything, business and life, if you're okay with it.
Absolutely.
Oh, perfect, perfect. All right, so tell us, like, who are you? Who's Nick? What does Nick do?
Huh. Nick, that's an interesting question. I would say that there is definitely a lot of directions that I go in, but my main focuses revolve around real estate. They aren't they aren't specific to any one thing. Like I don't only buy and hold. I also do like PMLs, private money lending. Those probably would be my two main focuses, I would say.
Which mark?
So most of my stuff is in Florida and in my hometown in the Chicagoland area, the South Chicago area. But I also have some in Mississippi and in Texas. I'm looking to do more growth in. Actually, I got two we're working on in Oklahoma right now. Looking to do more growing in the Oklahoma, Texas, the Carolinas, and I would also say Ohio. Kind of they've been my main focuses.
So basically, you're a buy and hold person, right? Investor. As a buy and hold investor, I know some people buy to for the long term, which is appreciation. Some people buy for cash flow, and they don't care about appreciation. I'm talking about like the states that don't appreciate. There's a bunch of cash flow, but they don't appreciate a lot, which is around the Midwest. I've been told. So, what kind of investor are you, and why?
Well, cash flow is a beautiful thing, but the real money is made in the appreciation. So, I mean, you can go where you can make it a goal to have the cash flow as your main focus, but try and keep your target, I would say, in an appreciating market. So, for us in the Midwest, I mean, Indiana and Ohio, they are great for cash flow, but they're actually both of those being maybe a reddish to purplish state, a little more friendly to the investor, they are actually growing at a decent number. Now they're not doubling every 2, 3, 5 years, but they actually are appreciating a decent amount, especially if you are planning, if you're buying a buy and hold. The best thing you can do is try and find right a good deal, of course, but to find a good deal, just finding one that needs a little bit of work. Maybe it's just a little lipstick put on it to, save 20, 30 grand in value right there. So you instant have appreciation from whatever work you're doing. So you can, I mean, maybe you're paying 30 grand less and you got to put 5 grand into it. So, I mean, there's definitely some benefits there. That's why I'd like to focus a little bit more in those kind of areas. But I mean, everyone has their own different goals. If you got more money than time, then you go in appreciating areas and you just get the write-offs and everything else. And maybe it cash flows, maybe it doesn't.
Okay. So how many properties do you have right now?
I believe it's right around nine. I have. Some are multifamily, some are single family, and I've been converting actually a couple of them right now into co-living.
Okay. How's that going? Because I love co-living.
It's pretty cool. The only thing I've had trouble with one of my properties is getting that final tenant in. So 4 out of 5 rooms are rented, you know, and then just I don't know. It's been slow getting him in. I'm probably gonna just drop down the price a little bit and see if I get a little more interest. And I get a lot of people asking questions, just not the final I'm moving in phase.
Yeah, we get a lot of those too. What's the best state you like to invest in?
Ooh. Honestly, right now, my main focus has been Oklahoma for new ventures because I feel like there's a lot of potential growth out there. It's still kind of one of those Midwest areas where it's the amount of property taxes out there for the year is like 1 month in Chicago. It's crazy. The taxes are crazy. It's like Tennessee or somewhere. I mean, we're talking, it could be like six, eight, $900 for the whole year. And I've got an equestrian farm just 15 minutes from my house that I own at 25 acres. I'm paying, I think it's 1,200 a month in property taxes.
1,200 a month?
Yeah, it's expensive out here.
That's about
So
what we pay here in Vegas, like a year.
yeah,
Oh,
it's crazy, right? I mean, again, it's and that's the monthly, you know. So, but again, I love the property. It's an amazing. I mean, I've turned it into a beautiful farm. I have renters on it. I turned it into a duplex from a single family large home. Um, one of the renters is owns a rescue, and they have. I mean, I just went over there today actually. My kids love it. Well, my daughter does. My son, not the smell so much. But there's literally they just got some pigs. They have cows. They have the regular cows, the cuddle cows, chickens, geese, um, like a rooster, horses, goats. They've got an emu, a llama. Um, I know I'm missing some stuff. I mean, it's everything. It's crazy.
yeah, nice. So you rent that one out?
Yes, yes, I did a duplex on it. So each of them are 3 bedroom, 2 baths on each side, and got it rented out. That one's like right about just over break even, but it's such an amazing piece of property. We want to keep it and hold on to it,
Yeah. Okay.
but it's cool.
Yeah. So how do you get your deals? So are you actively looking for deals yourself, or like cold calling, like generating the lead, or how do you find your deals?
Well, in the past, I was just doing it more traditionally, where I was actually talking to realtors and, you know, asking them if there was any pocket listings, and then just whatever they had on the MLS, they would just send me stuff. But more recently, obviously, I've been gearing more towards the creative end, and I'm constantly looking. I have two creative deals I'm working on right now. One is in Oklahoma, and the other one is actually in Texas, near actually not too well, just south of Dallas, I want to say. But yeah, and both of them cash flow beautifully. Great interest rates. One of them is below 3%. Yeah, incredible. Cheaper. It's a lower percentage rate than on my house. It's crazy, and I can get a rental property for that. I mean, that's just a no brainer. Um, yeah, it's a little bit smaller of a town, so I'm kind of like feeling it out. I'm kind of working out the details of it, but it would be a very cool deal if it goes through. And I guess those two areas, and I haven't found any that. The only one that I actually almost got was in Ohio. It was a 6 unit in Ohio, and they were asking for only 10% down. So it was a 6 unit for only, what was it, about, I think it was like 600,000, and they were asking 65 grand down. And I'm like, it was cash flowing. It was beautiful. It was in good shape. I tried to jump on it, but somebody grabbed it first.
Yeah. So here's a question that I want to know, and
Yeah.
so you buy and hold, right? So and you say that they cash flow, some of them, they cash flow like the farm. You say there's a little bit above break even. So how do you where do you get that money to buy those deals? Is it to use your own money, other people's money? How do you structure those?
So, all my properties, I have used my own money that I've bought so far. I've been working out deals to try and structure them where I do start borrowing other people's money or private money partnerships too. That's what I've been more looking into doing. I have a couple people that I'm starting to talk with and work deals out. Nothing's come to fruition yet on the partnerships, but I mean, I've got the history, I've got the understanding. I know how to underwrite the deal. I've had plenty of success. So I guess I'm just trying to tell myself I don't need to always pay for it myself, and to have maybe more money, in the bank that can, for the unexpected things. But I mean, so far I've done them all myself, just from cash flowing other properties, from my own W-2. I still do that part time, but most of my time is spent on my business.
Okay. So what do you do in your W-2?
Work at nuclear power plants. We work on the turbine deck and under vessel. So we tear apart the whole machine. that that generates the power, and we do like precision inspections with it, make sure everything's running perfectly, replace parts if needed, and then under the vessel, we work on the nuclear control rods and replace those.
Holy shoot.
Yeah, it's
Oh,
interesting, right?
yeah. So I'm assuming your W-2 pays pretty well.
Yeah, decent. Yeah,
Okay.
and the benefits are really nice too. And and that was I was kind of like using that where I'm like, okay, well, I don't have the necessarily the real estate background, but there's a lot of people in my industry that make good money and have a good retirement, but they don't know what to do with the money and everything else. So I've been also in discussions with them on how to roll them into my deals or into other people's deals and help them convert their 401ks into self-directed IRAs.
Right.
So that's been another thing because I've done that myself and it's been great.
Yeah. Can you explain a little bit of why would people want to convert their 401ks into self-directed?
Yes, if they want to make anything more than 0% to 1% return, because that's true. You know, like if you think about it, true inflation, you're probably only making a couple percent in your actual 401k, and this gives you total control. I mean, even if you didn't want to invest in real estate, but I would ask why not? You can buy anything from Bitcoin to gold bars in a self-directed IRA. Paintings. I've actually bought paintings before in a self-directed, but what I've been doing, I haven't even spent any time wasting with any of that anymore because of the amount of returns I've been getting on my real estate. So the self-directed, you can be a private money partner, you can be a private money lender, and or you can just purchase properties in your self-directed. And I own a property that I actually bought before even getting in sub two, which has been great performer. And again, the benefits of owning a property, yes, you don't get to write things off in a self-directed IRA, but you also have appreciation and you get to borrow money that so like there's very few vehicles out there that you can use leverage in any kind of retirement account. That's one thing they restrict. So if you have a 401k, you can't use buying power to purchase and grow your value, right? In a normal stockbroker's account, you can do that. With this, you can actually use leverage like you're borrowing from the bank to get a mortgage. So you only have to put 20% down and the bank is, giving you 80% leverage on a retirement account, which is huge. And if you have 20, 30 years before you retire, what do you think that property is going to do if you're buying in a good area?
Appreciate it.
Yeah, and you only put 20% down and you get all of the appreciation. The bank doesn't split it. They don't get 80% appreciation. You pay that loan down and you get it all. So I love that. But what I love even more too is the private money lending. I mean, that's amazing. You can make 30, 40% return sometimes a year lending.
Yeah. Do you do lending right now?
Yes. On the short term, just the short term fix and flips.
What's a short term, like 6 months?
Yeah, maximum 6 months.
Okay.
So usually 3 to 6 months has been like the average.
Okay. I have a question now because sometimes people they get sucked into lending. I know like two or three that lend somewhere else and they didn't underwrote the deal. Do you underwrite the deal?
Yes. So I underwrite the deal, and the TC, I work with different TCs that usually get the deal flow coming in, and they also underwrite the deal as well. But I also do my own vetting. So and here's the other thing too is that when I help people that like especially other coworkers and some other people that I know that have gone in with it on me on private money lending, so I'll tell them right off the bat. Number one, I'll underwrite it. Number two, I'll also or give my own money. I'm put my own money up, right? So it won't be just him throwing his money into something, and then I'll be on the sideline saying, oh, like give me a cut or something. No, like I'm in the deal. I have a vested interest. So I do all the follow up. I make sure that they are emailing and in contact and updating and everything else. So there's definitely skin in the game, right?
Yeah, right. some precautions that you take when you underwrite a deal? Like what's the one or two things that have to be true in order for you to be confident on lending on that deal?
So the the actual property value has to be there, right? So the neighborhood matters. So I want to know what kind of neighborhood it's in and what they're actually getting it for and what things are selling for in that area. And another big one that some people might not look at is how long are things sitting on the market in that area. So if they're borrowing for 3, 4 months and it takes 2 to 3 months for things to move in that area, well, unless they're slapping some paint on the walls and then putting it up for sale, they need more time. So they're underestimating it, and they probably don't have the experience that they should have. So that's kind of a red flag right there.
Do you try to fix it? Do you tell them, hey, you're gonna need more time? It's gonna increase, decrease your interest rate or your terms, or do you just walk away from it?
I will try and coach them up and see if there's something that we can do, and or I just give them some tips for going forward. So to help them better underwrite their deals. I don't just want to leave somebody hanging, especially if they're trying to make something work and actually someone trying to make a difference and improve their lives and everyone else's. So I don't like to just kind of leave them hanging and not say anything or help them.
Perfect. Yeah, so that's interesting about how you do it since in your W 2, I'm assuming there's a bunch of people that have the 401k and you tell them to convert it into a self directed IRA and then you can use their capital.
Yeah.
Now,
and and I haven't on my own personal deals, but I have on other people's. And I'm like thinking to myself, why don't I just start making my own, not fund, but like getting my own deals funded and doing it the same way, and I can give them more experience too and show them kind of how it's done, and if they want to, and I tell them all too, like you should own property too, not just, get addicted to that percent return, because you're leaving so much meat on the, on the bone. Why walk away from the property? I don't know anyone that regrets like the properties that they bought. More people regret the properties that they fixed and flipped and walked away. And then 5, 6, 7 years later, it's worth more than double.
yeah, right here. Like,
Yeah. See?
should have kept
Yeah.
that one. Yeah.
It's crazy, right? You don't even want to go back and look.
Yeah, no, definitely. I have a story where in COVID we had a property and we sold it in November of 2020. Like so we held it as much as possible. It was here in Vegas. It was an Airbnb and November 2020 like I think the city like posted on our door like, "Hey, you can't do short-term rentals. Stop or you'll get a fine, blah blah blah," right? So, all right, like so we thought, all right, since and the casinos were closed at that time. There were like all our industry and this is Vegas, so this is our main industry. They were closed. Like there was zero activity. You can walk through the Las Vegas Boulevard and everything was shut down. Everything was
Wow.
blocked, all the doors were blocked. So what makes you so in my mind is like okay, the economy at least in Vegas is gonna take a crap. It's gonna go down, right? So we're gonna see a lot of foreclosures and the prices and with those foreclosures they're gonna bring the property values down. So what do I do? I'm like, all right, let me sell this one. So we sell it. We put it on the market and it sells at the market at the price that I wanted to, a little bit less. But then in 2021, I check again, November of 2021, 12 months after, I check, and the property has appreciated $100,000. Hey, like,
Oh,
how the hell could that happen?
oh,
So in my experience, like I'm not timing real estate again. I'm like if the property's producing, if it's not giving me any major problems, I'm gonna keep it until the roof falls off. So
right?
yeah, that's
Oh,
that's
gosh.
I learned. Like 12 months, like it appreciated an extra 100K. And
See, oh, that's brutal. I had one where I was haggling over, it was like $3,000. I was haggling over this property. on the coast in it was somewhere in Florida. I don't even remember. I think somewhere near Tampa. But this was back in 2017, 2018. And literally we were going back and forth about like 3 grand. And he was just he so like after like a little bit of back and forth, he brings the price up like 5 grand instead of like trying to like, narrow it down or anything. So I'm just like, all right, well, forget this guy. I looked back and like 3 years later, oh my gosh, it more than doubled. I'm like, and I worried about 3 measly grand.
Yeah.
So stupid.
But hey, that's how we learn though. So I
Mm-hmm.
I I learned my lesson that way. Where like, okay, like if it's not costing me money or major issues, I'm keeping it. Like I prefer for it to sit vacant there and me invest into it because Vegas and Phoenix are like the indicators for what the market is gonna do. So they're the first ones in the line if they're gonna appreciate or depreciate. So and a lot of we get a lot of from California people. So they sell the property over there. They come here and they raise the prices of
Well, right, because they sold a $2 million house, so they can afford, a $1.5 million house and still have money in their pocket.
yeah. So I've had issues. I had situations like that where they one of my clients when as a normal realtor they had a 2 bed 1 bath house in San Francisco. They sold it for 1.8 mil, and
Oh,
they it was like a tiny home. It was like a 900 square feet house.
uh,
And then they come here and they buy a 3,000 square feet house for like 500,000. So they bought a big house and they still have money in their pocket. So
isn't that crazy? How the heck? I mean, I love California. At least I love the state of California. That's yeah. I love like the actual land, love the weather, all that, but the politics is a little crazy, but man, it is beautiful out there. So perfect.
it
But
is
again, it's so expensive.
super expensive, man. So I had the opportunity when I was born in LA, and then I went to Mexico, and then I came back. I wanted to do college in the States. So I was like, all right, I can go back to my hometown, or I can go to Vegas where I had a couple family here. Like, all right, and then I was thinking about it, like, well, should I go to Cali? I'm like immediate families there, and I know it, and I know the weather's nice and everything, but the traffic is horrible. I'm a little bit of a car guy, so like there's no parking. If I want to have more than one car, it's gonna be brutal to keep it
Yeah.
in Vegas. So I've been in Vegas ever since. So
I mean, those aren't neither of those are bad places to live. So I mean,
exactly.
listen, I mean the weather it's gloomy and cold out right now. So I mean, I bet you anything it ain't gloomy and cold over you by you.
It's not. It's nice and sunny right now. Clear
Yeah.
skies.
Yeah. My solar panels aren't appreciating it either.
Yeah, solar panels.
Yeah, I got solar panels on this. I'm actually in a contract to put solar panels on all 3 of my properties in Florida. And I mean, 2 of them are leases, but they're 25-year lease. They're paying 5 grand to me out of pocket, and then my monthly payment will be still less than my energy cost right now. So I'm like, I'll take 5 grand and you know use the sun.
Exactly. Exactly. So what's the next step for Nick? Like what are you trying to accomplish? What's your in sub two terms? What's your Mount Everest?
Yeah, so it's to I want to get to right now. I've got 9 rooms in co-living. I want to get to 1,000 rooms.
1,000 rooms.
Yeah, that's my Mount Everest. I'm working on 2 right now for co-living. And again, I mean, I don't think that's unreasonable because heck, I met a guy over the week that had one house that had 30 rooms. Now that's a little excessive. I don't know if I'm going with that, but it's I mean, it's easy to get a single family house converted into 7 to 9 rooms. So I think it's very reasonable. And I want to do it. I want to start partnering up with people. I want to bring people along the journey. I want to show them how to do it. I have the blueprint. I've got, what I need to buy. I've got contractors. I've got property managers, and I manage some of them myself too, or oversee them at least too. It's very doable. This is a scalable business. and I'm really excited about that. And I also just want to also I feel like I can chew gum and walk at the same time. Sorry, but I want to do two things. I want to do that, but I also want that little caveat of I love helping people set up their retirement accounts into self-directed. Now, whether we're doing business or not, that's fine. But if anybody needs help setting it up, it can maybe be overwhelming or challenging to people. Feel free, reach out. I'm more than happy to help. I've helped a handful of people already set up their own accounts, but it's life changing gains compared to the stock market. Um, and I think everybody should do it. Like they said, the people I work with, we have a 401k and a pension. So I'm like, what are you doing with that 401k? They're both invested in the stock market right now. You have everything in the stock market, hoping that, what maybe the next president is the right one, or maybe, the bull market stays up, or you're just hoping that all these people that you have no control over, the companies, do the right thing. No scandal, no nothing. Instead, you got stock. You can invest in a property where you have some control, some oversight. There's only so many people, so many working parts that you can actually see the real results and make life changing gains as opposed to the stock market.
Yeah. Just so the people watching us, like, what's when you're gonna help them do a self-directed IRA, why should they do it? How much are you making by investing that money in real estate versus the stock market? How much should they expect?
So, oh well, for starters, I don't have any kind of affiliation with Directed. I want to say if you use like my link, if I send you a direct link for Directed IRA, I think we each get $50 or something. So there's really nothing there. It does cost you with the lawyers. I think it's like $1,000 to set up a self-directed IRA, and then actually, right now, they normally do $400. I just got a link in my email, now that you mention it, for $99. I don't even know how long it's for, maybe through the rest of the year that Directed IRA is doing it. So that's ridiculous because I know I paid 400 to set up my directed account. And really, it's contacting whoever you got your 401k with. It's getting the paperwork from Directed and starting the transfer process, and then setting up your LLC. And from there, it's a bank account, and then it's look for the right project. Where I would make money is if you invested with me, if we found projects to do together, or if I found private money lending deals that you want to go in on it with me. Those would be options to possibly make money together with. But other than that, like I don't profit from helping you move your stuff. Other than like if you used a link, $50 or something, I believe Directed does for an affiliate link.
Which you should though. You should.
Yeah,
I think you should. I think you should call Directed and tell, hey, I need an affiliate link.
you're right. I should get a special affiliate link because I think I've helped at least four or five people so far.
Okay. I mean, that's something. That's
Yeah, be like, hey, bringing you business.
exactly. So once they convert it into self-directed IRA, you know how people are, like they're too scared because we overthink stuff. Like, hey, I don't okay, I converted it, but now I have to find the deal. I don't know how to underwrite. How do they contact you, and what return on investment can they expect if they invest the money with you?
So you can contact me through, you can either text or email is probably the easiest way to get a hold of me. My phone number is 815-693-8262. It's 815-693-8262. Or my email is my last name, Varichak, V as in Victor, Arichak. That's Varichak at Gmail. No numbers, no dashes, no underscores. I'm the original. Yeah. And yeah, I can help you with the process. The returns you can look at, I would say I would say 20% a year is crazy low. I haven't gotten even that low before. Probably easily expect 30% a year returns with private money lending, and even the partnership. I would say within months we could get something up and running when we do a partnership of a co-living house. Because again, I've got the contractors to convert the rooms, the underwriting I already do, the properties I've got lists of. Could always use more. I'm always looking at new properties all the time, but there's Again, the property managers, I know I already have a list of the things to buy to set them all up. The two that I got up and running in less than 2 months. So they turned around pretty quick.
Which market?
So those two were in Florida, and the two that I'm working on in Oklahoma, they should be up and running here in the next month.
Perfect. Perfect. All right. So then we hooked you up on the money part. How do wholesalers, like say I'm a wholesaler, if I need money, like what should I expect from you? Like 20 that you're gonna charge me 20 to 30% a year?
So yeah, it usually is a 3 to 6 month lend for a fix and flip. I don't personally lend on long term, but I can find people, I know people that do longer term lending.
Okay.
And I would say on the low side, 20-30% a year, I think is what they would expect. I know I've heard of less, and I know some people do less, but not the ones that I personally know.
Nick. Okay. And then in order for us to help you with your goal of $1,000 for co-living, which markets are you focusing on for that, or is everywhere in the state?
So yeah, it's mostly the Sun Belt. Think of, Georgia, Oklahoma, Texas, some Florida. The only two Florida markets I'm interested in are Jacksonville and Tampa areas. And then other than that would be just like, Atlanta for Georgia, and the Carolinas I'm interested in as well. Ohio, and I think that was it. But I'd consider some in Tennessee as well. I do like some areas of Tennessee. The Indiana stuff, I'm always willing to look at too, just because it's close to my backyard. But yeah, that's about it.
So and then those for the co-living part, you want them creative, I assume.
Yes, that's the goal, is to get them creative. Now, if we need to do some kind of private money partnership and you've got a deal that we can get a DSCR loan on and can make it happen, needs a little bit of work or something, those are always willing. I'm always willing to look at those deals as well. Because one of them is that deal right now that I'm working on in Oklahoma. It wasn't a creative purchase. It's a DSCR loan.
Okay. And then you take care of all that, right? You have
Mm-hmm.
people.
Yep, that's what I'm currently doing. I'm working with a partner that needed help getting the DSCR loan because I can get the better interest rate because I've got deal flow and properties and projects under my belt. So the hard money lenders will look at me, and the banks will look at me and give me a better rate.
Oh yeah. Oh yeah, definitely. Why? Tell us why.
Yeah, so when they see you as a better borrower because you have the experience, so you're less likely to go under, and you've got, of course, a good credit score too. So they see you're a good borrower, and you've got experience, and that's what they love.
And mainly your W-2. That's
Yeah, yeah, it doesn't hurt. But DSCR loans, they don't look so much at that. They just want to make sure you got money in the bank and you got experience.
yeah, definitely. Okay. All right, Nick. So we're out of time. Thank you so much. I think we're probably in the next one. We'll do episode 2 for you. But we'll expand that because I felt like we have a lot more to talk about. Um,
Yeah, I love this.
yeah. So
This was awesome.
so again, to find you, are you on social media at all?
Yes. So my handle on YouTube is Nick Varichak Invests. I'm working on just getting it Nick Varichak. My son sniped my my main handle, so I'm in the process of getting just Nick Varichak back. But I also have Nick Varichak on an Instagram as well. So
Okay.
just at Nick Varichak.
Perfect, perfect. All right, sounds good, Nick. So, thank you so much for your time. We'll definitely do episode 2. I'll get you on the calendar, and then we'll talk a little bit more because I had a lot more questions about self-directed IRA, how to do it, what precautions, the co-living, how to do it, precautions. Like you talked about so many points that I would like to go in deeper. So we'll have to do episode 2 on that one.
Absolutely. All right. Well, thank you so much for having me, Gio.
All right, thank you, and guys, subscribe to the YouTube channel and subscribe to Nick Varichak
Yes.
invest in his YouTube, so you can see more of the deals that he does and the opportunities that he has to invest. All right, well, thank you so much, and we'll see you in the next one.